Well, it seems to be the question of the hour. Will the housing market cool off? Let's talk about it on today's Tuesday Market Update. Well, every day goes by, and every day this is the question. Is the housing market going to cool off? So let's talk about it today, get into the latest and greatest headlines and news of today. So, as we're looking at home prices for 2022, I don't think there's any secret at this point that the housing market and the housing continues to increase. So, the cooling off that many people are waiting for or looking for has not come to fruition as of yet. Now, this is not to say that it won't come to fruition because I think at some point it absolutely will. But let's just look at where we are as of right now. So, the as of January 2022, the median existing home sale price was $350,000. $300. That's according to the National Association of Realtors. Okay, that is a jump of 15.4% from a year ago, guys, which is insane. Like it's just insane. There's no other way to explain this, what's going on right now, but just pure insanity. But I think there's going to be some good news to come from this. So a lot of the buyers that were paying, looking for the lower interest rates in 2021, which we had obviously lower rates in 2021, and they still weren't able to purchase a home in 2021. This is largely the reason why. This, along with a lot of investors purchasing property. So I've been talking about this for several weeks at this point. The fact that as a owner occupant buyer, you are not just competing with other people that want to own the home to live in. You are competing against people that are purchasing these properties for investment property. And Texas, Houston specifically, Austin is off the charts right now. A lot of the big Texas cities are off the charts with sales, and a lot of those sales are not going to owner occupants, unfortunately. So you are competing against investors who have a lot of money. In a lot of cases, they have cash, which you as a owner occupant or potential owner occupant can't necessarily compete with, right? It's a very challenging thing to do when you've got a seller who has multiple offers and several of them are cash. Well, a lot of times they're just going to go with the cash offer just because they can get a quicker close. So, but right now the average 30-year mortgage right now is sitting around 4.5%. Just as I say that, it doesn't even feel right. It just does not feel right to say that. It seems like we're going backwards, right? I haven't quoted a 4.5% interest rate in probably 3 to 4 years. It's been a while. And a lot of people don't remember, but the early part of 2019, we were in the 4% range. And then we started to see a decline in the spring and summer months of 2019. And then, of course, 2020 hit, and we all know what happened in 2020. So it's very odd for me to even speak about a 4.5% interest rate. But the reality is, this is a good thing. And I'll explain why it's a good thing. It doesn't seem like a good thing. It's not a good thing if you're a new buyer to the market, you're looking to get into a home. Maybe you've been looking again since 2021 with the lower rates, and now we're bumping up these rates, which means your buying power is going to decrease. So from that perspective, no, it's not good. But rising interest rates are what actually slows down the market, which slows down competition, which allows more people that are looking to purchase for owner occupant reasons to get into the market, right? Because some of these investors are going to go away as these interest rates start to rise. Ultimately, real estate is still a great investment, but bumping up the interest rates are actually going to help things. So the federal funds rate, if you guys are not aware, that was increased last week. And that number that was increased hadn't been increased in quite a while. But I want to make sure you understand that the federal funds rate is not the interest rate. It is not the same thing. Okay. The federal funds rate is nothing more than this is the money that banks charge to borrow money from each other. Okay. It does not have anything to do necessarily with the interest rate. Now, what does have an impact on interest rates? The 10-year treasury. Okay. So this is showing you the 10-year treasury over the last few years. So interest rates tend to follow the 10-year treasury. So as it goes up, the 10-year treasury goes up, interest rates go up. As the treasury goes down, interest rates tend to go down. So you can see where we've been hovering over the last, this is going back to 2018, but you can see this is where we were 2020. This is where we were 2021. That's 3% right there, guys. That's the 3% line. This is where we were. That's the 10-year treasury, excuse me. That's the 10-year treasury right there. This is actually the interest rate. So you can kind of see that they tend to mirror each other, right? 10-year treasury goes down. You can kind of see down here, interest rates kind of go down. There's a little spike here. There's a spike there. So you can kind of see where this is trending. And unfortunately, that trend is going up right there. And then you've got the 10-year treasury going up as well. So this is as of February. And unfortunately, the last month, this line continues to go up, right? So right now, we're right in between here, that 4% to 5% range. And unfortunately, the people that are getting hurt the most by this are people that are first-time buyers. These are the people that are being affected most by these rates going up. But as I mentioned, having higher interest rates, yes, it does affect your buying power, but it is going to slow down the housing market, guys. It's going to slow down at some point here. We haven't seen it yet. That was the expectation as they bumped up these rates that housing was going to slow down. We haven't even really hit the so-called buying season for us in our business, which typically is starting now, end of March timeframe, goes through spring and into the summer and then early fall. So you figure September, October, things start to slow down. That's kind of like the normal cycle, so to speak, of our busy season for people that are in this business. So we haven't even got to that point yet. We're just starting it, and we've already got these rates bumping up. So as counterintuitive as it seems, having a higher interest rate is really not a bad thing because it's going to slow things down. Demand's going to slow down overall, but that gives the first-time buyer more opportunity to get in. So 4.5% interest rate, yes, it's high, but guess what? So are rents. Take a look at this, because this is why I am so adamant about home ownership, and this is why. We may have a crash. I don't know for sure. We may very well have a crash, but this is what I tell people who say they want to wait or they're just going to sit out because the interest rates are too high. This is rent. This is a rent index, a year-over-year percentage in 20 markets in the US. Houston is sitting at number 12. Look at Miami, all right? You may not be able to see this. This is 38% increase. This is from January of 2021 through December 2021. Okay, so let's get down to where we are in Houston, right there. So the purple is showing what it was in January of 2021. The pink is showing where we are as of January 2022. Do you see, guys, that's more than double. It may be a little hard to see this. It's more than double. Just take my word for it. So for those who say they want to rent or they want to wait, this is where I have a little bit of pushback against that. If you're financially able to get into a home, and I know there's a lot of frustration right now, but this should frustrate you more if you're trying to get into a home and you decide, you know what, I'm going to wait it out for either a crash or I'm going to wait for rates to change or whatever your reason it is for waiting. This chart right here should actually frustrate you more because all this money is going directly into a landlord's pocket, right? You could be doing the same thing if you have your own home. So I wanted to share this chart with you because for people who don't want to come out of their rental situation, and again, there's going to be people that need to stay put, right? They don't need to buy a home right now for one reason or another. But if you're waiting for the market to change or the market to crash, what are you losing by waiting, right? Even if the rate is 4.5%, you're paying double. And so I mentioned this a few weeks ago that a lot of people that are in leases right now, whether it's a single family home or an apartment, when they're coming up for renewal, the landlords are jacking up the rent. They're jacking it up because they know, first of all, they can get more, right? They are for profit. This is not a nonprofit business being a landlord, whether you're an apartment or a single family home. It's for profit. So guess what? If they know they can get more money and your lease is coming up for renewal, they're going to bump it up. And if you can't handle it, so be it. They'll probably get somebody else to rent your property or apartment, whatever the case may be. So the other thing I wanted to show real quick is the rent growth. So this is slowed a little bit by this is showing you detached properties versus attached. So this is apartment versus single family home. Apartments versus single family homes. So if you take a look at this chart real quick, you can kind of see both of these numbers have been skyrocketing. Again, it's that hockey stick going straight up. This is not what you want if you're a tenant right now, not what you want to see. So keep that in mind, guys. If you gotta pay to live somewhere, understand, prepare yourself mentally for what's going to happen when it comes to finding a home in this market. We know it's a challenge. Just get yourself prepared, get yourself financially ready, get yourself a pre-approval, not a pre-qualification. You really want to get a pre-approval right now. And a lot of reason, honestly, right now, there's really no reason for not to get it because most buyers have time. So you need to send your documents into a lender, whoever it is you're going to use. You want to make sure you have that pre-approval. So when the market change, and it will shift, guys, it's not a matter of if, it's just when it's going to happen. But in the meantime, just have yourself prepared, right? Mentally prepared. I think that's way more important right now than anything. Financially, you need to have that pre-approval, yes, but mentally you got to be prepared to go and almost, I hate to use the word battle, but essentially it's kind of coming to that term of being a battle, whether you're competing against an investor or someone else that's moving into Houston. That's just what we have to deal with right now. So ultimately, I still think it's worth it if you have the money, you are mentally prepared to go look for homes, and it may take you a while, right? It's a different market. So if you're not ready for that, maybe you need to wait. Otherwise, you are going to continue to throw money away if you're renting, right? You're just throwing it away. And these landlords are trying to cash in, just like sellers are trying to cash in right now. The landlords are doing the same thing. So if you guys have questions, please hit me up. I will see you guys next week. Also, go check out TexasMortgageBoss.com. There's some resources there. And I'll see you guys on the next Tuesday Market Update. Take care. Hey, thank you so much for watching this video. And before you go, do us a favor, head on over to MortgageBossTV.com. That is our YouTube channel, okay? If you would give us a thumbs up for this video and subscribe, that way you don't miss any of our new